mobile payments capability in Japan, the world watched in fascination as phones were used to do, and I quote, unprecedented functions, including buying train passes and paying for things previously only possible with a plastic card. I can remember then thinking how cool it might be to organize a mobile safari to Japan to see just how people were using their phones instead of cards to pay for things. There was that much of a focus on how Japan was showing the world the way forward with mobile phones and payments. But now here we are, more than a dozen years later, with smartphone adoption in the U.S. at 80% of all mobile phone owners, and on track to hit just about 70% of all people in the U.S. by the end of this year. E-commerce volumes are growing double digits each year and now account for 9.1% of all retail sales, and nearly a quarter of that overall volume is driven by sales made via the mobile device. Nearly half of that is with one very famous Seattle-based retailer by the name of Amazon. But with the increasing dependence on mobile devices to do everything, including shop and pay, comes the great responsibility of all of us to deliver a digital experience that meets the expectations of these consumers. Friction-free, fast, secure, and very much putting the consumer in control, which is the nexus of our discussion today. How can all of us in payments and commerce and retail leverage the great potential of the mobile device, not just to replicate the activities that people do today with their plastic cards, but to totally reinvent the experience? I'm delighted to be joined by John Rosner, VP Product Strategy at Fiserve. Hey, John, thanks for joining me today.
Oh, it's my pleasure, Kara. Thank you.
And would you have gone on that mobile safari for me with me back in 2004?
Absolutely. Right. The chance to see innovation, right, out in the wild, so to speak, to continue your safari analogy, I would have jumped on that plane in a second.
I actually almost pulled it together, but let's get into the conversation today. We've got a lot of rich material here, and I don't want to waste a minute of it. I talked about the digital expectations and user engagement intersection, almost the conundrum that we're all trying to see our way through. But why don't you add a little color commentary to that and get us started?
No, absolutely. And so I think, Karen, you're absolutely right, right? When we thought about things over a decade ago, it was very much focused on using the phone for a payment and replacing digital with analog. But what's happened, right, in the ensuing decade is consumers' expectations have been very much shaped by the world around them, and particularly what's happening with smartphones. And not just those expectations shifting, is that we're at the point, right, when we're looking 10 years into this, really understanding the impact that having a consumer's engagement through digital channels has on their behavior and what that does. And all of us see it in our day-to-day life, whether you're an Amazon Prime customer or have shifted your television viewing habits to Netflix. All of us can see how our daily lives are changing, how our behavior is changing, and we're seeing that as well in the world of payments and financial services.
I like the second bullet on user engagement, engaging consumers to help reduce fraud. I think there are some interesting applications and lessons from that, we'll get to that in just a few slides from now. But John, run us through the level set of the landscape with respect to what's creating or setting the consumer's expectations around digital.
Sure. I mean, expectations are being set around digital is really putting the consumer first and foremost in control, right? Consumers today, right, know what they want. They know they want things now. They want things easy, and they want to be in control to take charge to meet their needs, right? Attention spans are going down quite radically. Our brains are literally being rewired by the devices in our hands, and so people, right? I like talking about people instead of consumers, right? people want to be in control to make things easier, right? They don't have the patience that we all did a decade or two ago, and that's the expectations that they have, and often until maybe machine learning catches up or gets to where it needs to be from a potential perspective, they're often the best people, right, the best equipped to address things like fraud as something that continues to rise increasingly, seemingly inexorably, month over month, year over year.
So let's talk a little bit about the stats. I mean, I alluded to some of these at the very beginning: smartphone adoption accelerating. You've got a chart here. It's a lot. People not only have cell phones, they increasingly have little mini computers in their hands, in their wallets. I mean, in their pockets, in their purses, that give them a lot of potential to do lots of things that were once only done on desktop.
Yeah, that's exactly right. And so before people thought about really analog channels, and that cell phone is fundamentally an analog channel, even though it started using digital technology compared to landlines, right? But the adoption of smartphones, right, that adoption curve is just really steep. You can see how that the slope of that curve compared to the adoption of cell phones is much higher, as all of us are getting more and more comfortable of adopting new technologies, right? And what that smartphone has done is, as that computing power has increased faster and faster with Moore's law, right, as speeds of internet access has increased more and more, and the cost of data has continued to plummet, the use of smartphones increased, right? And all of us, right, are using those phones more and more for every aspect of our lives, downloading more and more apps to do more and more purpose-built, single-built mobile applications to make life easy. That is what is sort of resetting consumer expectations, right? The expectation that, an app is updated, every couple of weeks or once a week. People have the expectation that things will continue to improve, and they don't need a manual for it, right? That brands that they're interacting with are going to see what they're trying to do on their devices and see what they're doing and begin to just make things easier and put that consumer more in control and make it as seamless as possible to do what they need to do.
Yeah, I agree with that. I think the smartphone with apps makes those kinds of things so accessible. I always refer to my 82-year-old dad who, is happy as a clam on his smartphone. He knows how to use it. He's, the app happy guy. And it's, hats off to the ecosystem around mobile that just makes that experience very, very user intuitive. Speaking of which, let's talk about the speaker of which. Talk about no friction.
Right. So what's really interesting, what's happening with voice, right, particularly, voice and mobile, right, is that concept of just taking friction out, right? You can start with an app, right? A mobile app started with, right, an easier way to access the digital capability, right, in a kind of very simple, streamlined, purpose-built mobile application from an interface perspective, right? And then what you see with Amazon Echo is taking that ethos of design thinking to the next level, right? And it's, Alexa, I want a pony, right? And the answer is, okay, sending pony now, and you insert whatever you want here. But what's interesting is you think about this experience is what does not happen, what don't you see in the consumer experience here, right? And think about all of the decades for all of us standing in line in the supermarket. We're saying, cash or check, Visa or Master. That conversation is nowhere in the Amazon Echo experience, right? There's no question about what payment you want or how you want to make a choice or give me card data, right? There is none of that there, and so you have a much more seamless experience as you think about what's happening with embedded payments, right? Not so that the goal is to have embedded payments, but it's really re-engineering and reimagining what that commerce experience is. It's all about the removal of friction.
speaking of friction, standing in line, that's a real pain.
Exactly. And so, we're here today to kind of talk about payments, right, with an eye towards financial institutions. But really, again, financial institutions, they're customers, they're members, right, they're people, right, and people, right, or users, if you're thinking about design thinking, right, the concept that I like to talk about is friction, right, where it's very generally defined as anything that prevents a user from completing an action, right? And so the Alexa is a great example of putting in card information, but how many times, right, Karen, have you had the experience or other folks had the experience where you're on the way to work in the morning or you're catching an early morning flight at an airport and you walk by that Starbucks and there's a line out the door, right? It's rush hour at Starbucks. And half the time, right, sometimes you're going to wait, and half the time, like, you know what, I'll just be grumpy and cranky today because it's not worth standing online for half an hour or 20 minutes. And that's really tough for Starbucks. Think about their brand, right? That was a negative brand impression, right? That was a lost sale, right? And when you have, that negative brand impression, right, a consumer is more likely to then be open to another brand, right? And the lifetime value of that individual would then go down. And so what did Starbucks do, right? They said, okay, their digital solution was order ahead as a way for their customers to bypass the line. And this is actually a snapshot, Karen, of my mobile app. So in case you're wondering what my go-to drink at Starbucks is, you can see. But for me, just to make it real personal, right, I often work remote on Fridays after a long week of traveling or commuting, and I've got a standing 8 a.m. morning call, and I've got that choice in the morning of, do I attempt to brew my own? Do I want to run out to grab a cup of coffee? And it's just so seamless with Starbucks, right? Where I go in the app, I've got my favorite, I hit buy, and then it's available sort of 4 minutes later. I get in my car, I drive to Starbucks, I walk in, and my drink is literally waiting for me. And there's a line of people out the door because it's downtown in the city, and everyone is there in the morning to get their caffeine fix. And that was Starbucks' really innovative solution to that problem of friction. Because friction does get in the way of people completing action, and again, that impact that you have on the brand loyalty and customer lifetime value becomes significant over time.
Yeah, it's also 20% of their transactions now, and our data, I'm sure lots of other people have similar data. When people order ahead, they often order more. Maybe it's easy to add on, but it's also deliberate add-on where someone, for example, ordering ahead on the way home may order extra for lunch the next day. So there's the incremental lift with respect to, not only removing friction, but just making it easy for consumers to add on more stuff.
That's right. Absolutely. Absolutely. And so we all know where Starbucks is today, right? But what's more interesting, right, if you think about the consumer expectations, right? So Starbucks launches in September 2015, and then less than 9 months later, Dunkin' Donuts comes out with the same functionality, right? And it's interesting when you look at Dunkin' Donuts clearly trying to grow, but at the same time owned by private equity, might not be as keen to make those significant investments in digital and mobile, but really didn't have a choice, right? The market was moving in a certain way. Consumers were beginning to have an expectation, and if you're a consumer that says, well, I can avoid a line at Starbucks, but I have to wait in line in Dunkin' Donuts, or what's now Dunkin', right? It becomes a very easy choice over time for a segment of people. And now it's hard to walk into a Dunkin' store without seeing order ahead plastered all over the store in terms of encouraging that behavior and letting consumers know that functionality is available.
Plus, when the Patriots win, you get benefits, 87 cents the next day, because that's Gronk's number. Anyway, it's a good thing. It's a good thing. Dunkin' does good stuff with respect to security.
I would have spoken about the Giants, but we can leave it at the Patriots.
You definitely don't want to bring that up. Okay, so So let's talk about more friction.
Yeah, so if you think about friction, right, it's all great to see what's happening outside, but like, what does that look like in the world of payments, right? And here's an example, looking at Apple Pay with Bank of America, right? That oftentimes you're looking to add a debit or credit card to Apple Pay, you'll go down what's called a yellow path, right? Which in this case required a phone call for the consumer to call in this case Bank of America, in order to complete the action and get that card into Apple Pay, right? And from a banker perspective, this makes all the sense in the world, that thinking about fraud and risk and all these controls that are really top of mind for financial institutions. But you also have to, if you're driving digital transformation, really think about what's the impact on the consumer, right? And there's a healthy tension between fraud and friction. And this is just an example. It's not just friction, and as you're thinking about shopping for cards, when you look internally within financial services, within the payments and banking space, you could see examples like this everywhere, right? And it's incumbent upon all of us in the industry to find ways to mitigate and remove some of this friction if we're going to drive that consumer adoption. Because it's probably the rare consumer, right? It's probably not every consumer that's going to be eager to jump through those hoops. Everyone's distracted. You've got kids screaming in the background or something else getting your attention. It's easily on to the next thing without completing the task.
So what's the punchline?
So the punchline here, right, is when you want to look at friction, well, how do you understand and where to focus on? When you think about digital and you think about moving more online and into mobile phones, I always like to talk about understanding consumer behavior, right? You can think about that prior example. It might seem like a lot of friction, but you want to look at the data to understand, well, how much friction is there? How many consumers fall out of that funnel or that purchase path? And so I love this picture. I'm not sure, Karen, if you've seen this in your own life, going to a park, downtown, or perhaps a quad at a college campus, right? We see this all the time, right? People find the best way forward in terms of what they want to do, regardless of how a system is designed. And really understanding how to look at behavior, see what the consumer is doing and what they're trying to doing, and then making the path easier. Because if you actually go to some of the best managed, parks or universities in the country, you won't see these dirt paths, because what they'll do is they'll pave over them and lay the cobblestones and redesign based on where people are going, in order to remove that friction and know where to invest the resources.
And I think your next example, using adapting messaging to what's important to consumers, I think is a really interesting application of user behavior data.
I think that's absolutely right. And so this is an example that we did at Fiserve. Is we launched this mobile application called Card Valet that enables cardholders to set controls on their debit and credit cards, as well as receive alerts on where those cards are used or if a control is violated. And there were a lot of hypotheses that the controls are what's most important to consumers. That's the message that's going to resonate based on what some other players had done in the industry. Particularly, I think Discover was one of the first to market with this feature a couple of years ago. And then we looked at the data and said, well, how are cardholders using the mobile application? There's a lot of features around controls, a lot of features around alerts, and how are they taking advantage of it? And what do we need to do? What we found is it was a small minority of consumers that were engaging or triggering a control in terms of how their debit or credit card was spent. And the overwhelming majority of the users of the application were using alerts for all transactions focused on preventing fraud. And in doing so, we looked at that data and said, okay, well, what do we do with this data? We're clearly adding a lot of value to our cardholders and our financial institutions, and we'll talk about some of that later on, Karen, but we said, let's try to drive adoption. There's a nugget here. We see how people are using it, and we completely switched our messaging to be human-centered based on that consumer behavior.
It's interesting because it's really, in both situations, it's about control, but it's just putting it in a context that's more relevant to the consumer. And I wonder, do you think that the association with fraud is because consumers are now so much in tune with the risk of fraud and stolen financials and credentials being available so widely now on the dark web? Are consumers just more in touch with that as a concept?
Yeah, I think the brand aware, let's say it's a poor terminology, maybe the brand awareness of fraud, right, has been going up, and maybe the first big shift was a number of years ago with the Target breach, but the news kept on coming, right? So I think it is increasingly top of mind. So it's becoming a far more universal need for people in the United States, and not to say that there isn't a segment of the population that controls are important for, but that need to control versus the need to be more aware and help manage and protect against fraud is far more applicable given the media cycle that we have and the frenzy that's out there with the 24/7 news cycle. And whether we like it or not, fraud, consumer fraud, really just somehow it makes the headlines.
It's also putting the consumer on the issuer's team, right? Because if the consumer is engaged in monitoring their accounts in real time, they can help detect situations that are fraudulent before it gets worse. So I think that's also an interesting byproduct, if you will.
Yeah, no, I think that's absolutely right. Which almost, as it kind of shifts over into kind of our next section, Karen, right? When we think about the payments landscape, right here at Fiserve, we've been in payments and financial services for over 3 decades now, and we survey households in the U.S. on an annual basis to really track consumer sentiments over time from a longitudinal perspective. And one of those big themes that's coming up to your point about being control is you're looking at over a third of consumers that are profiled are looking for tools that keep up with their busy lifestyle, right? That make it easier for them, right? That people don't have the time, right? 1 in 4 households admit they don't have enough time to manage their finances the way they want, right? They know that fraud's important, but they might not have the tools to do it the way they need to, right? Checking in and reviewing statements on a monthly basis, clearly something everyone should do as the best practice, but might not fit into someone's busy lifestyle. And having mobile solutions on the go is clearly something that fits into consumers' expectations.
John, is financial management tools defined as broad as savings, or is this a more narrow definition around payments and transaction activity and balances and things like that?
This is really more broad, right? As you think about your financial wellness and health and financial management in general, payments as a component of that, right? And even just to highlight, right, 60% of these respondents, right, said that managing money is something that they have to do and not something that they want to do, right? And managing money is everything from savings to keeping track of your credit card balances and your debit card transactions.
Great, got it. Let's talk about expectations around faster and real time. This is another interesting hot topic.
Yeah, so it's all about instant and real time, right? And this is being shaped by, right, again, having that phone in your pocket and everything available all the time. Right, when we look at how households define real time, right? Nearly 70% define that as real time, right? Within immediately or within a few seconds. And when we think about how that concept of a wallet evolves from just kind of making a payment to helping managing your financing, managing your debit cards, your credit cards, and everything around banking, it's all about being able to do things right away, right? And being able to do things through a digital channel where that functionality, that request is visible, completed, actioned, and confirmed immediately. That's what consumers really expect. And that's why Amazon is doing everything they're doing with drones. And they literally, I think Karen announced last night that for, I think, a large number of Prime members within the United States, there's free same-day shipping from now until Christmas, right?
Yep.
And so and everyone is moving towards this on how do we get to instant. And I think the good news is, at least within financial services and payments, when you think about debit and credit cards, by definition, right, those are instant, so we've got a strong foundation. And how do we really think about those wraparound products and services to help manage what consumer expectations are with everything else they need to do for those products? And
yeah, John, I'm gonna have you kind of skip through the next couple of these. Great data, but I'm gonna be quiet because I'm interested in moving through. So just go through the next couple slides, and I'll make a comment at the end.
Sure. So moving on to the next slide, right? It's consumers have more and more choice for financial services, right? The rise of fintech startups, and even we spent some time talking about Starbucks with the I think billions of dollars that they have on account, right? The world is becoming fragmented. What is interesting in surveys that we've done is that consumers still look towards their primary financial institution for recommendations, right, and for advice on those financial solutions, right? So for now, financial institutions in the United States still have momentum behind them and a bit of a moat to maintain and build and deepen consumer relationships. But that bar, those expectations are being set by those big digital brands coming out of Silicon Valley and the West Coast, as well as the fintech startups. So it's there's that phrase "burning platform," and that platform is definitely, if not roaring fire, is beginning to simmer and smoke.
Yeah, no, I mean, we have the same, results from some of the studies we've done talking to consumers. I mean, they do trust their bank and the card brands for enabling payment and financial services, they do. But, clearly the expectations, as you point out, are being set by the other fintechs that offer other experiences digitally. So I think that's where some of the tension rests as well. Let's move in now to the next topic, which is loyalty and engagement.
No, so I think that's a great transition. So if we think about, well, how do you drive loyalty? How do you drive engagement, particularly in the digital space? Rewards are a critical component, right? I think you'd be hard-pressed to find anyone in the payments industry that didn't either jump on the Chase Sapphire bandwagon or was watching it pretty closely. But rewards are increasingly getting more and more competitive and more broad, both across debit and credit, right? As they're a proven mechanism for driving that reinforcement of consumer behavior, right? And think about how do we add value to payments and really drive that engagement and brand awareness. As we think about, there's some work that was done by Mercator and asked cardholders just point blank, what will get you to use your card, in this case a credit card, more often? And over 50% said that rewards would help, right? Which is not surprising, right? So you ask, you can do that research. People might tell you what they think or what they want to hear. And, at least here at Fiserve, we looked across our client base and said, well, is that really true and what happened? And really building that loyalty. What we did here, Karen, is we indexed and looked at some data, indexed spend at 100 across debit and credit clients, and well, what happened to spend when a cardholder had, went and registered for rewards and said, you know what, I want to go earn rewards on this debit card or earn rewards on this credit card. And just the act of engaging digitally and beginning to earn rewards and see that point balance on their statement and see the point balance online go up with every purchase, you see a 30 to 60% increase in spend. What's most interesting, though, is when we look at cardholders that redeemed, right? They actualized the value of those points, right? They went online, they redeemed points for a trip, or perhaps a new iPhone, or even a gift card or cash back. You saw a significant engagement and lift in spend over folks that were registered, right? Because you're creating that virtuous cycle, right? Where you're rewarding behavior, consumer sees the reward, gets the reward, right? Gets that dopamine hit in their brain in terms of pleasure, something positive happened. And that reinforces the positive behavior, right? And that's really important that and we'll talk about fraud in a bit, right? But the consumer becomes front of mind. They're in control. They're deciding how they're earning points, seeing their earning points, and getting, ultimately kind of pleasure and satisfaction from that activity, which then deepens engagement with the brand and increases lifetime value.
Yeah, it shifts preference to a product where the consumer does feel as though they're getting rewarded in the way that's important to them. Maybe it's not necessarily points, but it could be cash back or something like that, where the consumer is engaging with a product because the rewards are relevant for how they wish to redeem.
That's absolutely right, right? And those redeemers are across all sectors. And, some of the best practices we've seen is having rewards programs that do have options, right? And give consumers those choice based on what is most important to them. Right, as we think about adoption, right, when there's a lot of research out there about how important mobile is, right? And not just mobile, right, but to visually see the points, right, and seeing the impact of those points accumulate over time, right? That term that we've been talking about for a few years is gamification, right? And I heard you laugh, Karen. I said kind of the word the dopamine hit, but that is really and truly what is happening, right, with the mobile devices that are in our hands, right? As we're craving, right, that next update on Facebook, the next update on Twitter, right? Even if you're, as an example, right, if you're texting within an iPhone, right, and an iMessage to another user, you text it, you hit go, you hear that sound of the message going off, and the other person is typing. You don't see what they're typing, but you've got that sort of someone is typing window, right? Because it's that positive reinforcement that something next is going to happen next. And that's exactly the same thing for rewards, right? That our brains are conditioned for that hook, right? That hook, that positive reinforcement, and seeing those rewards visibly, one, that consumers expected, and two, it then drives that loyalty and engagement with the brand.
Yeah, I think how that's messaged and where that's messaged. I mean, being immediately visible, I think, is really important. Otherwise, it becomes too abstract. But I also think it serves to your point, it increases the momentum to get to a goal, whatever that goal happens to be. And I think there are products that do very, very well at giving consumers the feedback and the metric on where they are, and there are a lot that need to adopt those best practices.
Right. Absolutely correct, right? And not be afraid of investing in loyalty, right? And investing in that currency, right? Because it's not an expense, right? It's really an investment that yields significant dividends in terms of consumer loyalty and lifetime value.
So is it time to talk about mobile payments, my most favorite topic in the world?
sorry, my mouth had gotten stuck, so I apologize. In the past 20 seconds. So, if we think about mobile payments, right, it's a topic that is near and dear to so many people's heart, right? And the way that we like to think about mobile payments is it's any payment that's completed on a mobile device, right? So it's not even that narrow definition where it might be those three wallets between Apple Pay and Android Pay and Samsung Pay. It's really saying, right, a payment or a commerce transaction that's completed on a device, and right, estimates, right, and studies that are done is that, in the next couple of years, 3 years out, right, half of all online spend will come from a mobile device, which is a pretty astonishing statistic.
Yeah.
Terrence, when we talk about kind of the mobile payment adoption, you started off by going back over a decade into Japan and kind of where we're going to be, and we get the question all the time, well, what's going on with adoption and why are we there, are we not there? And here at Fiserve, we've been tracking adoption of various technologies for decades, right? And we did some interesting work earlier this year to plot adoption based on our annual survey that we do of online banking against digital wallets. And what we see is actually something really interesting, right? That you've got kind of a similar adoption curve between these two things. And again, that slope of a digital wallet is a bit sharper, right, as people are adopting technology faster. And the question is, you look at online banking today, and it's fairly ubiquitous in terms of consumers using online banking instead of just going into the branch. But that's not where we were, over 20 years ago. And you look at, well, what is it or what changed? If we think back to 1998, we were sort of still doing dial-up, right? If we were lucky enough, right, we just upgraded from our 14.4 baud up to a 28.8, right? Logging in through America Online. And what was happening in 1998 is you were just beginning to get into DSL, right?
Mm-hmm.
Access was there, right? And when you first got into online banking, you can go in there and see a balance. We really couldn't do much anything else. And as you think about the next few years in the late 90s, right, that DSL started spreading. It became easier and faster to go online. And banks started adding more, right? There were more banks that started having online banking, right? You couldn't, not that people did online banking, not many banks had online banking services. And so that, as we think about the situation, that begins to drive adoption. Something very similar when we think about digital wallets, right? Apple Pay launching back in 2014, right, that capability was available on just the latest iPhone, right? Today it's not possible to buy a product from Apple that doesn't have Apple Pay embedded in it. Same thing with, right, Android phones, right? And when you think about Apple Pay launching in the beginning, you had a handful of marquee retailers, and you look at acceptance today, years later, and you're looking at close to 50% of retail locations, by the top 500 retailer locations by the end of this year. And so that's what we're seeing is you need to have some of the foundation in place and drive that consumer adoption. But ultimately, right, it's about having a better experience, right? In terms of like, well, why would someone use their phone? Is it easier? It's funny, Karen. The first time I used Apple Pay was with my daughter. She's 12 years old, and I think we're in a Dunkin' Donuts. And paid something, took out my phone and paid, and she looked at me and said, "Daddy, that is the most amazing thing ever. It's so much easier. Why would you ever use your card?" And I looked at her and said, "Well, can you explain to me why this is?" And she said, "Well, Dad, it's very simple, right? If you want to use a card, you have to take your wallet out of your pocket. You have to take your card out of your wallet. You have to swipe your card. You have to wait. You have to hit next. You have to sign. You have to click OK. You have to get a receipt. You have to fold the receipt up. You have to take the receipt and put it in your wallet, take the card, put it in your wallet, take your wallet back in the card. Daddy, that's a lot of work. And your phone's already in your hand and you're done." And it seems, through the eyes of a 12-year-old, it does seem like a Rube Goldberg approach to making a payment when all of us are sitting in line in the stores with our phones in our hands anyway. And so at least for me, that was a little bit eye-opening when you think about how easy it is, and particularly with Apple Pay, right, with that haptic touch, right, that you feel, right? Again, that positive reinforcement, you know when the transaction is complete, in contrast to, say, an EMV transaction where is that a good beep or a bad beep, taking my card out?
All right, John. I'll leave my I'll not get up on my soapbox about the about mobile payments adoption in store. I mean, it suffices to say that I think there still needs to be, you know, more interest on the part of consumers to do more than just substitute a form factor. I mean, I think we all agree to that.
Absolutely. But I do think there's a very different use case. We think about adoption 4 years ago versus today in terms of in-app payments and in-app friction, right?
Yep.
When you think about using an Apple Pay, right, or a Samsung Pay, right, within a mobile device where you can bypass entering all of those payment credentials with the touch of a button, but clearly removes friction. We're thinking of going back to that Alexa example earlier that we started with. Really does make things easier for consumers, and to the extent that we see more and more of the proliferation within apps to make that experience better, that clearly is something that we're seeing some traction with.
Yeah, I mean, I think, you know, the interesting horizon will be to see how these experiences port across channels, because there's still this very different experience in using one method of payment in app, one method of payment in store, and a different method of payment via mobile browser. And I think that's where a lot of fragmentation and friction becomes. Consumers don't want to have to keep track of the different brands. It's why cards, even card on file, is still a very popular way of payment, because consumers don't have to think about it. But anyway, let's move on. I'm conscious of our time.
Yeah, so moving forward pretty quickly, right, there's some data out there from MasterCard, right, which basically sort of is indicating that, right, when consumers and cardholders start using some of those mobile wallets, they do see a spend lift, right, and a lot of that's around, you know, increasing frequency of use and brand presence, and the lift is the majority of that lift is actually outside of the wallet, right? So having that good experience within a wallet for those consumers that were the early adopters and figured it out, having a positive experience there translated into a stronger affiliation with the brand and increase in sort of ordinary plastic spend.
Do you think that's because that consumers are registering a card that they use anyway in the wallet? I mean, is there any evidence to show that they're establishing preference because of a different card was put into the mobile wallet than what they might ordinarily use?
Yeah, I mean, I think that's definitely possible, Karen. I think what's interesting with this study, it's really measuring pre and post spend for that card that was put in the wallet, right? So was the act of putting the card in the wallet something that drove spend, or was there a decision that the consumer made to start using that card more, right? It's sometimes hard to tell, but nonetheless, definitely saying something that if you're an issuer out there, you probably want to ensure that you are enabling tokenization and mobile payment to give for that choice.
Sure.
That's something that we've seen as well, looking at data across Fiserve issuers, that cardholders that do have token transactions in general are more engaged, right? And if you think about that consumers have choice and most cardholders have multiple cards in their wallet, we think it's really incumbent upon issuers to embrace tokenization, enable tokenization for those payments. So oftentimes cardholders that want to adopt those are very engaged with that payment method, and you want to make sure that you're letting your card be there and removing that friction without forcing the cardholder to choose another brand.
You know, I think this is all really interesting input into what we're going to talk about next, and that is experience related to fraud. I'm paying attention to our time, John. This is really an important conversation, so let's just be conscious of our time.
So moving forward to fraud, right? Fraud is continuing to grow. It's a hockey stick that doesn't stop accelerating. And what we're really seeing is that having engaged consumers that receive alerts, right, can be a financial institution's best partner to reduce fraud. They're the ones that are best equipped to know what transaction is not there in order to take action to prevent a run from a fraud perspective. And a lot of our experience here is based on a product that Fiserve has called Card Valet, which is a mobile application that enables cardholders to receive alerts and set controls for their debit and credit cards and have that with them and active and monitoring at all times. And what's sort of most interesting is you can look at the feedback right on the App Store, sort of, why, at least I love digital, is consumers tell you how they're using it, and you see the great example here of someone self-styled as, hey, I've been viewing his app as a lifesaver. That's how they call themselves in the app review. And you can see exactly how that alert process works, right? That a fraudster is testing it out with a pre-authorization. And that cardholder was immediately able to stop and turn off that card and cancel it before any money was taken out of their account.
That's interesting. That's a great story.
And it's through the eyes of a cardholder, right? And they're always the best ones to tell you what's happening. And so we looked at that anecdotal data, and what we've seen, and we did a survey again across our base of our clients and cardholders that are using, and what we found was an up to 53% reduction in fraud losses for those cardholders that are using that Card Valet product. And what's really interesting is that the reduction in fraud increases with adoption, right? Because fraud is inherently random, and so the more, with the law of large numbers, the more consumers that are using a fraud tool, the better the impact will have on reducing that fraud.
Interesting. Really, that's a very, very compelling chart.
One of our favorites.
I can see why.
What's interesting, though, is you think about not just reducing fraud, right? Again, you don't have to ask people how they feel about it. They tell us, right? That's the culture we have today, is sharing everything on social media. When you look at Google Play, right, the phrase peace of mind, right, resonates so strongly with so many financial institutions whose brands are all about safety and security and trust. And peace of mind was put so well. So what happens when you have peace of mind is we see that the result of having higher peace of mind and feeling more secure about your payment vehicle is that you start using it more. You're less afraid if you had hesitations with using that debit or credit card for certain types of transactions. We do see a lift from an overall population perspective. And what's most interesting, what we found was most interesting, and our clients find most interesting, is how do you engage and how do you really activate cards? And this, our Card Valet product with these alerts, that we had the biggest lift among cardholders that were least engaged, right? Almost that holy grail is how do you take consumers that are lightly engaged with a brand to have them become more engaged with the brand, and that's exactly what we found here. That sense of safety and security appears to be manifesting itself from a causality perspective in increased usage.
How are you finding that the cardholders are using this capability? Are they using it to monitor, or, your prior slide suggested that they are actively engaged in turning cards on and off. Is that atypical, or is that part of the behavior of a cardholder that's enrolled in this program?
Yeah, so the dominant behavior is receiving those alerts, right, which gives them that sense of safety and security, and in turn increases spend. You have far fewer that are setting controls, similar to, I would argue, right, Mint is a very popular product, but it doesn't appeal to everyone in the United States in terms of having that detailed view of their personal finance. I think there are some consumers that want to set controls on where their cards are used, but having the ability to turn off a card in the event of fraud might not happen very frequently, but the ability to do so, coupled with instantaneous, real-time push notifications for transactions makes for a fairly compelling user experience.
You know, as we think about pulling all this together, you and I have chatted about this notion of a mobile wallet, and I alluded to the fact earlier that wallets really need to do more than just substitute for a form factor and provide additional value to consumers across the shopping channels they like and frequent the most. And I think this is an interesting depiction of at least how Fiserve is looking at this from the standpoint of portfolio of solutions that issuers can take to market.
No, and I think that's absolutely right. So we're viewing, right, mobile, what was traditionally viewed as mobile wallet as, let's say, an NFC payment far greater, right? Consumers' expectations around the ability to self-service, have instant functionality and take control of their lives is a bit greater than an NFC payment and more broad. And so as we think about a vision about what the comprehensive solution set that consumers are expecting and looking for both now and in the coming years, right, we think there's a very strong foundation with these controls and alerts as evidenced by the data that we've just reviewed, particularly with fraud growing. Easier digital payments and giving them the control around what those payments are and enabling access to all those wallets. And self-service is more and more critical, right? Those statistics that, 60% of the consumers' households, right, don't look forward to managing their finances, right? Wanting to call an 800 number, no matter how wonderful your customer service is generally not something that any consumer looks forward to with any brand, for better or for worse. And so we think about self-service, it's a great way to re-envision and drive digital transformation, right? One example of that, something that we're working on at Fiserve is travel notifications, right? The ability for a consumer, right, from within a mobile application to let their issuer know, I've got a trip coming up, I'm going for spring break down to Mexico between date number 1, date number 2, and receiving the immediate confirmation that's there, giving them the comfort that they know what they want to do, they know where they're traveling, they don't have to fumble through an analog channel. And from an issuer perspective, the fact that that consumer request is immediately sent to and embedded and actioned in a risk authorization system also massively simplifies operational support for the institution. And so we think there's a tremendous amount of opportunity to expand that suite of self-service capabilities. And of course, we've spoken about rewards and offers.
John, what are you hearing from your FIs in terms of where they are on the continuum of being able to either support these 5 things or their interest in extending those things to their cardholders?
Yeah, so there's strong interest nearly across the board. Right, the primary areas of focus and interest that we're seeing from our clients is primarily around the controls and alerts, as fraud is, maybe not the number one, but a top 3 to 5 focus of any financial institution's CEO and board of directors, and having a proven tool to combat fraud losses is really top of mind for them. And then the next big area is really around self-service, as financial institutions are looking for ways to deepen engagement with their cardholders, streamline operational processes so they can focus on value-add activities in terms of complex servicing as well as cross-sell.
Two questions related to acceptance, I guess, and enablement. One relates to cryptocurrency. I'll let you think about that. And one relates to, it's an interesting question, Chase Pay and the opportunity to enable a bank-branded wallet like that through your channel. Any thoughts on either?
Sure. From a cryptocurrency perspective, and we can have a whole hour conversation.
We should. Yes, we should do that. We should do that another time.
Another time. As we think about cryptocurrencies, today I don't think, at least in the short term, we're seeing acceptance as cryptocurrency from a mass payment perspective, similar to a Visa MasterCard or another association network. Something that here at Fiserve we're clearly keeping a very close eye on and doing some work and pilot partnerships in terms of blockchain as the underlying technology, but cryptocurrency as a supplemental or primary means of payment transactions is not something that we see in the short term necessarily.
I would agree with you. And very funny story. I was in an Uber in New York a week or so ago, and my Uber driver was very proud to tell me that he accepted payments using Bitcoin for a $90-some fare. And I said, well, how much is it worth now? He says, I watch it every day. He goes, it's worth $97. I said, okay. Somehow he thought he was going to actually be a millionaire by accepting his fare in Bitcoin. It hasn't quite worked that way for him.
Absolutely. And then I believe that the second question was around something around Chase Pay. Can you just recap that?
So Chase Pay obviously is a mobile wallet and acceptance mark using Chase products. And the question is related to how do you see that as a potential offering through your bank channel,
Yeah, so I think it's something that we are definitely watching carefully, right? And ultimately to watch the traction there. What's most interesting when you look at a Chase Pay or what Samsung is doing as well, and particularly the retailer-specific mobile apps, right? It's having the retailers come to offer value-add discounts and benefits. And so what I can say is that we are actively working on and continue to look at how do we leverage the data that we have as we get into big data capabilities to partner with retailers, with merchants to bring them new customers and in turn add value to cardholders and our financial institutions.
A question about self-service options. Anything specific, and do any of the self-service options include voice, specifically Alexa?
It's a great question. That is something that from a cross-Fiserve perspective, we are investing in quite heavily. So over time, we are definitely looking to have Alexa skills added in terms of self-service from a card perspective, leveraging some of the larger efforts that are underway across the Fiserve family. It's also interesting as you look at there's a number of different platforms for voice, and underpinning all of that is an investment that we are making collectively in an underlying API infrastructure that allows that functionality to be more readily deployed across more and more channels based on where consumers' expectations are and where their behavior is shifting to.
I think voice is an extremely powerful interface, so it'll be interesting to see how that evolves, not only here but just broadly across the payments and commerce ecosystem. Well, listen, John, we're just about a minute from the top of the hour. Any final thoughts from you on the state of as we think about 2017 into 2018?
Yeah, so I think final thoughts are really that the digital expectations are continuing to accelerate, and there's a real opportunity for financial institutions to increase their investments to drive user engagement, right, with those tools. adding more capabilities, adding more services, those investments just yield significant dividends, not only over the lifetime of a customer in terms of lifetime value, but even the very, very short term with immediate P&L pressure that comes from fraud losses.
With mobile wallets, their form and their function, and getting consumers really focused on how to use them beyond just a form factor substitute, which I think is in everyone's best interest. Well, listen, thanks, John. It was a great conversation. Lots of great data, and all of you who listened today, we will have a replay and a recap article up on payments.com in the next couple of days. We really appreciate your taking the time to listen so intently and to ask such good questions. I hope you have a great rest of the day and a good week. John, to you as well, thank you for joining me today.
Thank you so much, and have a wonderful day.